Are you looking for a smart, low risk way to grow your wealth without constantly watching the stock market? Then ETFs, exchange traded funds, might be your best investment tool. In this video, we'll break down the top ETF investment strategies you can use to build long term wealth in 2025 and beyond. Welcome to Finance Solutions 360, your complete guide to money, investing, and financial freedom. If you're new here, make sure to subscribe for simple and powerful finance tips every week. Let's start with the basics. What exactly is an ETF? An ETF, or exchange traded fund, is a collection of different assets, like stocks, bonds, or commodities, bundled together in one fund that you can buy or sell just like a stock. Think of it as a basket of investments. Instead of buying individual company shares, you buy one ETF that already includes dozens or even hundreds of them. This means your risk is spread out, costs are lower, and managing your portfolio becomes much easier. So, why are ETFs so popular among beginners and long term investors? Because they're simple, transparent, and diversified. You don't need to research individual companies. The ETF does that for you. They also have low expense ratios, meaning more of your money stays invested, and you can buy or sell them anytime during market hours, just like stocks. It's like combining the best of both worlds, the diversification of mutual funds and the flexibility of trading stocks. Now, let's explore the top 5 ETF investment strategies you can start using today. One index tracking strategy. Invest in ETFs that mirror popular market indexes like the Nifty 50, Sensex, or S&P 500. This is the easiest way to match the market's performance and grow steadily over time. 2. Thematic investing strategy. If you believe in a specific trend, like technology, green energy, or healthcare, you can invest in ETFs focused on those themes. It's a great way to bet on the future. But remember, these can be more volatile. $3 cost averaging, DCA strategy. Instead of investing all your money at once, invest a fixed amount every month. This helps reduce the risk of market timing and averages out your buying price. 4. Core satellite strategy. Build your main portfolio with index ETFs. That's your core. Then add smaller satellite positions in thematic or sector ETFs for extra growth potential. It's a balanced, professional approach that gives both stability and upside. 5. Global diversification strategy. Don't limit your investments to one country. You can invest in international ETFs that track markets like the US, Europe, or emerging economies. This spreads your risk and allows you to benefit from global growth. Before you start, avoid these common ETF investing mistakes. Don't chase short term performance. Avoid investing without checking expense ratios. Don't put all your money in one sector or country. And remember, consistency is key. Small, regular investments beat impulsive ones. So, to recap, ETFs are one of the best tools for long term, passive investing. Pick a simple strategy, stay consistent, and let time do the magic. If you found this helpful, hit the like button, share this video, and subscribe to Finance Solutions 360 for more simple and powerful investing guides. Which ETF strategy do you plan to use? Index, thematic, or core satellite? Tell me in the comments below. Thanks for watching, and I'll see you in the next video.